All right, good morning, everyone. Let's fire it up. Okay, last night, a little bit of a non-event. We actually traded down at the beginning of the session. Started to look like the market was going to potentially fail after holding flat the day before. Then we actually built into a bit of a rally that failed at the end, which was, yeah. So we kind of had a couple of head fakes either way. Ended up finishing more or less flat. The last half an hour wasn't great, so I wouldn't chalk it up for a win for the bulls. That last half an hour was definitely soft. We did have initial jobless claims yesterday, which are a shade weaker, but more or less in line in the moving average over 4 weeks. We have retail sales as well, which were also basically in line, and we continue to see the same sort of thing. In terms of data that's been broadly in line, no real shockers or upside surprises to really kind of force the Fed's hand either way. So I think that it is pretty open-ended for them in September at the moment, and unless we just get a couple big data points that are really good or either really bad. All right, let's get into the Asian session overnight. Basically a non-event here. I mean, the biggest move we had was a 0.5% out of the Australian market there on the back of some of the commodity stocks under pressure. I mean, everything else, was pretty much dead flat. It's an absolute non-event of a situation there. You had Nikkei, which is down a touch. Their connection with China is obviously very, very big. I believe about 30% of their trade-weighted basket makes up yuan, and so a weak yuan for them is actually a bit of a problem for them, and they need to keep the yen weak versus the yuan. So I think that you maybe get Kuroda that kind of keeps his foot on the pedal a little bit longer there in terms of monetary stimulus. So I'm not sure if this 124 level is really going to be able to drop anytime soon, even if we do get some more risk off. Excuse me. All right, well said. Standard Bank out with earnings this morning. We're looking at full year numbers versus half year earlier and trying to kind of work them back. From that point of view, it looks like maybe in line to a slight miss. I think divi per share maybe a slight miss as well. So just watch and see this morning, see how it plays out. But I don't think they are brilliant numbers, let's put it that way. And we got stocks going next div on the weekend. So on Monday, that's BTI, MND, and MMP. So keep that in mind. All right, market data today. We had German GDP out, shade of a miss. This morning we had European GDP as well, which comes out 11, as well as European CPI. Then we've got industrial production out of the States at 3:15 and University of Michigan sentiment numbers at 4. All right, let's get into the maps. All right. First thing that we're going to look at this morning is Foschini Group. Foschini closing well below 140 there, 138.61, and so you can see, I mean, we've bottomed out here around 140 a handful of times, so I think there's a little bit of a level that's dropped there, but you also have a bit of a descending wedge here, which is still not quite been dropped out of. It's right at major support there. If we drop out of that, then I think we really can accelerate to the downside a little bit. The target and that in terms of initial target, we'll throw out at 130 there, maybe coming down into some sort of support there, and even bigger levels potentially all the way down here at 120. At 120, I'll probably have a backswing on this share, and I don't exactly like it, but it's a major support level. We'd be hitting a huge retracement off of that level, and so I think that like I said, if we drop below today's or yesterday's closing price, then I think that we could really accelerate to the downside, looking for at least 130, maybe a little bit more. Next one we'll look at is Woolies, which has put in an incredibly resilient hold here at $100. closing 101.82. I mean, we're very quickly already trying for new closing highs, which are up right around 102. So after retesting this, and we had a beautiful breakout here, we came down and retested. Now we're starting to push higher, and this looks absolutely classic. Definitely looking like we've got at least another 4 or 5 rand upside here in Woolies. Yesterday we saw major reversal in golds. I mean, absolutely enormous. You can see here in Anglo Gold, we basically came in and kind of tested what was support, now becomes resistance here around 90 bucks. Didn't quite get there, but got close. And a huge reversal yesterday. We were down 9% in Anglo Gold in the States yesterday, 11% out of Gold Fields, 15.5% out of Harmony, 8% out of Sibanye. I mean, they just got absolutely decimated. And so you can see here across the board, there's Harmony in the States, just turning down hard, and with a very little, very little of a pullback in the actual gold price. And I think what that tells us is that these things are really, really just in a bad space, and that even with only that small pullback in the gold price, guys are just waiting for opportunity to either sell out the longs or reshort them. You also have the same sort of thing in platinum sector. Impala's yesterday very quickly, again, disappointing. You can look at that in like a 30-minute there, and you can see here already starting to look like we're turning over a bit out of Impala. So you got to keep that in mind. These stocks, I think, they're going to need a savior here to be able to kind of hold up before some of these things actually declare bankruptcy. I genuinely believe that that's going to happen, and it'll probably happen inside the next 6 to 9 months. Anyway, that's it for today, guys.